Today's topic is Bank Reconciliation Statement Example Part 2. Welcome to my channel. This is Part 2 of BRS, that is Bank Reconciliation Statement. Now let's see how the transactions, that is how the events are appearing in the bank statement, that is the bank statement which is maintained by our banker, which is also called the Passbook. Our account is maintained by our bank. The banker updates the bank statement, that is the passbook. Checks received from Mr. X is shown on the credit side of the passbook, and checks given to Mr. ABC is shown on the debit side of the passbook. Okay, this is how cash book is prepared by us. That is, the bank column alone is prepared by us. Now, the opening balance is shown on the debit side of the cash book. Then, when check is received from debtors, that is our customers, it will be shown on the debit side of the cash book. If it is deposited directly into our bank, it will also be shown on the debit side of our cash book. Then similarly, if we issue checks to outsiders, say for example creditors or our suppliers, then it will be shown on the credit side of the cash book. In short, all inflows come on the debit side of the cash book, all outflows come on the credit side of the cash book. Very important thing in BRS, that is debit balance in cash book means favorable balance. Debit balance in passbook means what? Unfavorable balance or bank overdraft. Credit balance in cash book means unfavorable balance or bank overdraft. Credit balance in passbook means favorable balance. Okay, let's see how BRS is prepared. We already discussed in part 1 of BRS. There are so many reasons for the differences in the balance as per passbook and the balance as per cash book. This could be one of the reasons. Maybe the cash is received and not presented for payment, or checks issued and not presented for payment, or bank charges debited by the bank, or interest on investments entered in the passbook alone. So all these could be one of the reasons. So if all the reasons for the differences is given in a problem, then in that case, we can either start from bank balance as per passbook and end in bank balance as per cash book, or we are starting from balance as per cash book, we have to end up with balance as per passbook. A simple problem to understand how to prepare BRS. From the following particulars of Mr. Sivaperuman, prepare bank reconciliation statement as on December 2016. Balance as per cash book 7,130. Check deposited but not cleared 1,000. A customer has deposited 800 into the bank directly. Okay, let's start. Now, balance as per cash book is given. So, I am going to start from balance as per cash book and end up in balance as per passbook. The reasons for the differences in cash book and passbook are given here. That is, check deposited but not cleared. A customer has deposited 800 into the bank directly. These are the okay, the reasons for the differences in the cash book and passbook balance is given. So let's start now from balance as per cash book. Right? This is the way we have to prepare bank reconciliation statement. That is particulars, rupees, bank reconciliation statement of Mr. Sivaperuman as on 31st December 2016, particulars, rupees. So now I am going to write balance as per cash book. Amount is rupees 7,130. Let's see what and all items have to be added and deducted from this. Here, check deposited but not cleared. See, what I said is that I am going to start from balance as per cash book and end up in balance as per passbook. So if I am going to end up in balance as per passbook, I have to focus only on passbook. So checks are deposited but not cleared. So as soon as the checks are deposited, what will I do? I will immediately record in my cash book. So there is an increase in cash book balance, isn't it? But in passbook, what happens? There is the decrease in passbook balance. The banker will record this transaction only after the check gets cleared. So until then, there is the decrease in passbook balance. I already said that we have to focus only on passbook because we are going to end up in passbook balance. So what is happening for the passbook? There is decrease in the passbook balance. But in cash book, there is increase in cash book balance. So now what we should do? We have to match this cash book balance with the passbook balance. So I have already recorded in cash book, but I haven't recorded in the passbook. That is, the banker hasn't recorded in the passbook. So there is a decrease in passbook. In order for the cash book to reach the passbook balance, we should also reduce because there is a decrease in passbook balance. So we should also reduce our cash book balance. So now, check deposited but not cleared should be shown as a deduction in the BRS statement. That is the bank reconciliation statement, which is, so in BRS statement, now I am going to deduct check deposited but not cleared. Less check deposited but not cleared. Amount is ₹1,000. Okay. Okay, the next one is a customer has deposited ₹800 into the bank directly. Here what happens? Our passbook balance is increased. That is, a customer is going to our bank and is crediting in our account. We are not aware of the fact. So we haven't made any entry in the cash book. But the passbook balance is increased. See, the passbook balance has increased. I already said that I am going to start up from cash book and end up in balance as per passbook. And we have to focus only on passbook. So what is happening in passbook? In passbook, our balance has increased. In order to match the cash book balance with the passbook balance, what we should do? We should also increase our cash book. Understood? So now the amount of ₹800 will be added to the balance as per cash book. Now amount deposited by the customer directly is added and checks deposited but not cleared is deducted. So with this, from this 7,130, I am going to add 800. So what is the total now? 7,930. And I am going to deduct this ₹1,000. So what will I get now? 6,930. What is this called now? This is balance as per passbook. Thanks for watching. Please like, share and subscribe.